Impacted almost every aspect of life in South Africa and exacerbated the challenging economic environment, leading to questions around how tax may be used to fund social initiatives and vaccines as well. Botha, who's the head of corporate tax consulting at BDO, joins me now. Thanks so much for your time on SABC News this afternoon. Just explain to us what the current tax environment in South Africa looks like.
It is a sad state of affairs. The tax base is dwindling, SARS is under pressure, collections aren't looking good. We know there's areas of the economy that is outperforming, especially those businesses that has had an upswing with COVID-19. But generally speaking, we're all under pressure. So we're looking at an initiative because we know what the challenges are. We know what's happening on the private side. We've had some let's just call it corporate failures and scandals there. We know exactly what the situation is with state capture, and we know what our issues are at SARS, the Commissioner's plans and strategy, and the challenges that they are facing. So we have taken the initiative to take a step forward and actually say, this is the situation that we have. Instead of pointing fingers and playing a blame game, someone needs to step up and take control of the situation and demonstrate leadership. So this initiative that we're looking at on the 29th of January, where we're going to have a very good panel discussing and unpacking this, is looking at the tax duties and responsibilities of non-executive directors and saying that if we need leadership in tax, where should that leadership be? And we feel it's with the non-executive directors.
Let's just go to corporates before we come to the non-executive directors. The Business Day reported that corporate tax evasion in South Africa cost at least 7 billion rand. Let's talk about the tax culture specifically with corporates in South Africa.
That is a culture of managing risk. The majority of companies are tax compliant and they do adopt the spirit of complying with the law. Unfortunately, we do have certain industries or a handful of taxpayers that still have aggressive planning. And as part of this conversation that we want to have, we would like to explore tax strategies of your larger multinational corporations and also look at enhanced reporting and transparency. Again, this is something that we feel need to be regulated, and the accountability and ownership should be with these independent non-executive directors sitting on boards and audit committees. I think it's time for companies to relook at who their tax stakeholders are. It's not just SARS, there's a much wider stakeholder community. And the expectation of this wider stakeholder community has to be taken on board in the message that we relay or communicate or articulate into the market. So therefore, your transparency and the reporting that you do on your tax affairs, and this is not just corporate tax, this is all taxes. So companies should ideally articulate what the tax value is that they've delivered in South Africa or the society in which they operate. And we need a much higher level of disclosure. And one of the issues that we should be debating is whether or not we shouldn't look to other jurisdictions like the UK or Australia or international reporting standards and initiatives that's happening globally and adopt those in South Africa and actually regulate those.
Okay, you've spoken about the role of company directors, what they can do to drive a more engaged tax agenda in order to ensure that there's more compliance. But obviously they'll be working within a system, the tax system that we have in South Africa, which needs a permanent establishment for companies, allows for companies like multinationals to skirt certain taxes. For instance, it's been estimated that digital companies like Google could contribute over 4 billion rand in taxes to South Africa. So does the larger system not need an overhaul in South Africa?
There has been great advancement made in that regard. So we have automatic exchange of information agreements between different tax administrations in the various jurisdictions. So they are exchanging information on taxpayers with one another. We also have initiatives like tax inspectors without borders, which is an OECD initiative. where global tax audits will happen, and then your specific jurisdictions or someone like SARS will then just plug into that global audit that happened and rely on the outcome of that audit for the multinational. So there are initiatives, the data is there. We have constrained capacity, and SARS is in a process of rebuilding. So I don't think we're using the data that we have effectively at this point in time. And that's why we're appealing to the private sector, especially your multinationals, to actually demonstrate leadership in tax. Take the step and actually enhance your reporting and disclosure. So if you operate in multiple jurisdictions, your country by country reporting and enhanced reporting on tax becomes very important. And that's why we're appealing to non-executive directors to actually take this on board as one of their duties and responsibilities and make sure multinationals provide enough information in their annual and integrated reports for us as the reader of those reports to actually see explicitly what the strategy is, the direction they've taken, how they demonstrate that they are in control of their taxes, and there has to be an element of responsibility included as well.
When you speak of responsibility, we know because of the crisis that we are facing, on top of the COVID-19 pandemic, on top of the challenges South Africa was already facing, there's an even larger need for the corporate sector, the private sector, to work with government in order to ensure that South Africa gets through the next period, however long that may be, of challenges. There's been a complaint from the corporate sector about that 28% tax rate, even though it's not the highest in the world. You know, France is about 32%. The Netherlands is also around 25%. So there's a challenge of corporates perhaps feeling like they're already doing a lot, but then also they're probably going to need to come to the party more in the coming year at least in order to make sure that at the end of it there is still some sort of a sector.
We agree with that, and especially if you look at the percentage of contribution between individuals in South Africa and corporate, when you start analyzing the tax base, we all know that the brunt of the tax bill is still sitting with the individuals. If you look at our tax rate and start comparing it with other jurisdictions, we are still at the high end. You can't just look at the 28% tax rate. You also have to consider that when you make distributions out of a company, you also have dividends tax, which is borne by the shareholder. So if you take the total effective tax rate and then compare that to other jurisdictions, we are a bit high. So one of the suggestions that has been made in commentary to SARS and National Treasury is maybe to consider something like getting rid of incentives that is currently in the legislation for corporates and then lower the tax rate, because those incentives don't always achieve the objective that they've been set out for, and it usually relates to tax planning opportunities and doing the tax base more harm than good.
Marcus, yesterday on Ayabonga Kawe's show on Metro FM, the Treasury DG, Dondo Mokojane, gave one of the options for funding the vaccines that we need to save lives in South Africa as increasing tax. So you're speaking about a dropping of taxes, but it appears that it may actually be increasing. What next?
So on the balance, if we're looking at a drop in the corporate tax rate and then getting rid of incentives, it will balance out and we should have a bigger contribution to the corporate tax base. As far as the comments that the DG made, other countries have already introduced taxes like that. In the news cycle currently, we have Argentina, who has introduced a wealth tax on assets, so not on income. So if you have assets to the value of X amount, then you're going to be paying a wealth tax. Unfortunately, the funding is going to have to come from somewhere. And it's the taxpayer that has to foot the bill. So it doesn't matter what the funding option is that government look at, whether it's going out and getting additional loans and debt. At the end of the day, it just means that the taxpayer is not going to foot the bill in the short term, but we're going to repay those loans in the medium, longer term. Whatever the options are, it's going to come back to us.
Marcus Botha, he's BDO's Head of Corporate Tax Consulting. Thanks so much for your time on SABC News this afternoon.
Thank you for having me.
It's time for a short break. I'll have more business news when we come back. Do stay with us on